afternoon. What's up, Chaos peeps? Welcome to the Chaos. My name is Brad. The stock market is crazy and chaotic, and I made it my mission to help you. You guys own it. It has been a crazy day in the markets. Everything's up. Looking at the S&P 500 right now, it is up about 38 points, or good for 1%. S&P sitting at 3809. That is a very interesting point, and we're going to talk about that a little bit later on in the show. But the Dow right now is up 445 points. The Nasdaq's up 100 points. Everything's green except for crude oil, which is now back down below $92 a barrel on WTI crude. And I guess I lied a little bit. Bitcoin's also down 336 points. That's down to 20,855 per Bitcoin. We're going to continue to cover earnings this week. Today, we have, Clover, Activision, Take-Two, Lyft, TripAdvisor, and a few more. But before we get into any of that, let you know what I'm expecting from all of these. Let me go ahead and shout out the starting five. What's up, Kevin Hawthorne, Jeff Chocolate? What's up, Sean Dupuis, Z Writer, and Bodie Beard? You guys are starting five. If you did not make the starting five, it could be because you're not subscribed or hitting that notification bell either. So make sure you guys are doing both of those things as I go live Monday through Thursday, 3:45 p.m. Eastern time, to cover all of the earnings. We're still in the thick of it. We got plenty of earnings that are going to be coming up this entire week, guys, and I'm super pumped for it. So today, a little bit of a slower day, as most Mondays are, but that doesn't mean that we aren't in for a hell of a week. As I had mentioned, we have Take-Two, Lyft, Activision, Clover. Remember that one? Check the poll. Many other ones that are also reporting today, but tomorrow is going to be a big day too. We have Walt Disney. Finally, we're going to talk about Disney a little bit. Occidental Petroleum, AMC, Upstart, Lucid, Affirm's going to be tomorrow, and I'm looking later in the week too. We got the Trade Desk, Rivian, Dutch Bros, Wynn Resorts, Matterport, Aurora Cannabis, because nobody gives a shit about that anymore. Neo, Yeti, so many other earnings that we're going to be reacting to. Roblox. I just noticed that Roblox is in here as well. So yeah, really some good earnings that we're going to be reacting to. Obviously not as exciting as some of the heavy hitters that we've seen last week and in the weeks prior, but man, what an absolute day. And I think we have a pretty amazing week to look forward to as well. But how are you guys doing? I put up a poll here in the chat already. Looks like a lot of you guys have already reacted to it about Clover. I mean, when was the last time that we actually talked about Clover Health? 2021? Probably. I think we barely talked about it in 22. It has been rough. It's crazy to see the stock down at $1.30 per share. Mentioned in the poll here, do you still hold Clover stock? 15% of you say yes. Why bother selling now? 31% said cut it a long time ago. 50% just said nope. And 4% say, baby, come back. Baby, come back. I feel like maybe I'll get demonetized from that. Was it too much like Hall Notes? Did I sound too much like Hall Notes? Because if I did, probably not getting paid for this stream. Anyhow, so let me share the screen here of Clover Health. Here's the chart, and obviously, as you can see, just on the daily chart, it's been absolutely brutal. This was once a SPAC, had a bit of a short squeeze element to it. Let me go to the weekly chart so you get a better idea of what's happened with the stock. Started as a SPAC, as many of the ones that got beat to hell did. And then we saw it squeeze all the way up to $28.85 a share. Since that high, it's done nothing but go down, and now it is down quite a bit. This stock is down an unbelievable amount, 67% so far just this year. Over the last year, it's down 83, almost 84%. So it's pretty rough. Estimated earnings per share on this is a loss of 24 cents, $799.47 million. That is a drop in growth from last quarter. Last quarter, it actually beat revenue growth and just barely missed on earnings. This time around, we'll see what happens, but I don't think that there's anything to really get excited over. I will say over the last 3 months, estimates have seen 1 upward revision and 4 downward. Revenue estimates have been seen 3 upward revisions and 2 downward. So the growth element, the revenue growth is certainly there, but they just haven't been able to figure out how to make money. And that's going to be a big problem, especially in this environment where we see higher interest rates and that sort of thing. Company that's just not making any money right now isn't going to really do well in this environment, right? So, Chris Edwards says when Chamath was in the news, yeah, that was the last time we talked about it, probably. Snookeroo, appreciate it. I thought player played, baby, come back. I knew Snookeroo would be in my corner. I sounded just like Hall Notes. Oh man. So we have a couple other stocks as well that are going to be that we're going to be reacting to as far as earnings are concerned. Activision, as we all know, uh, acquisition by Microsoft with this company. So I don't think that we see much movement out of this at all. That was your weekly chart. Here's your daily. It has come down quite a bit. I believe the purchase price for Activision from Microsoft was $80 a share. So I mean, hey, we might have a little bit of movement on this on some good earnings, but we'll see. The last year, the stock is actually green. It's up 6.5% over the last year. It's also up around 5.5%. Again, that's probably on the premise of the Microsoft acquisition. Estimated earnings per share is 50 cents per share, $1.71 billion in revenue. We're split as far as analyst revisions on this, 3 up and 3 down. Last time around, they came in and beat earnings. They missed they beat revenue. They missed on earnings per share. And I'm not sure what to expect from this. I've played a little bit of Call of Duty since the new one came out. Maybe we'll see how much comes of that. Can we hear from them on those numbers for the current quarter? That's of course going to impact the guidance as well. How many downloads, how many daily active users, monthly active users are on something like a Call of Duty or what have you. So I think that certainly is going to play a factor, but we'll see. We shall see. That was Activision Blizzard, and it's pretty rare that we see both of these major video game companies actually reporting on the same day. And that is its counterpart over here at Take-Two. If you guys aren't familiar with Take-Two Interactive, mostly known for NBA 2K, some of the 2K sports, as well as Grand Theft Auto. So we'll hear from them. Estimated earnings per share for Take-Two was at $1.38 and $1.54 billion in revenue. And so the revisions here are also split. Last time around, they came in and missed on earnings per share. They also missed on revenue. So we'll see what they have to say here. I'm not quite sure exactly what's going to get them to beat, but even if they come in so let's just say they come in close, that's still 50% growth year over year. I mean, that would be insane. That would be insane. The stock obviously hasn't been performing like it's been growing 50% year over year, but maybe that makes it an opportunity. And I'd be curious to see what you guys have to say about this. Now, granted, it is a bit expensive on the valuation side of things. It's trading at 22 times next year's earnings. So just given the overall climate, what we've seen from some of these stocks that are trading a little bit high, you can make the argument that perhaps maybe this is overvalued, and I don't want to touch it until it gets to a certain point. But listen, it's okay to pay a premium on a stock that's growing 50% year over year, right? I mean, if there's a recession, I would imagine that Take-Two actually does better, or even Activision does better if we're seeing hints or signs of recession, because you might be cutting costs on traveling and some of the bigger items, right? But it doesn't cost that much to play video games. Maybe this actually plays into the favor of something like a Take-Two or an Activision. Would love to get your guys' thoughts. Make sure you let me know in the comments below what you're thinking about Take-Two, Activision. It's video game day, it would seem. So those are your two, and then we also have Lyft that's reporting earnings today as well. There's not one part of me, a bull or bear market, that likes ride sharing platforms in general. And this stock obviously hasn't been doing well either. It's kind of shocking, honestly, to see it down at $14 a share. It is a bit unbelievable. This is trading at 68 bucks just in March of last year. In March of so in 18 months, this has sunk a ridiculous amount. Does it make it valuable though? Is this a value trap of sorts? Can you rest your laurels on something like a ride sharing app such as Lyft if we do see a bull market come back? At these prices, maybe, but it's down 68% year to date. Over the last year, it's down 75%. Estimating earnings per share on this, and this is the kicker for this. So normalized estimates at 8 cents per share. That's the number that you're gonna see in the headlines. The gap estimate, though, is a loss of 50 cents. So they're still not really making money. Okay. On the surface, they kind of are. $1.06 billion in revenue. Also, revisions are split on this from analysts as well. You couldn't, I wouldn't buy it with your money. I wouldn't buy Lyft with anybody's money. I wouldn't buy Uber either, for that matter. Can it move on good earnings today? Sure. But in the long run, I just don't see how it happens. They've been in business for God knows how long, so has Uber, by the way, and neither one of them can really figure out how to make decent money. Z Writer says maybe Lyft goes up no matter the news. That could certainly be worth making an argument for. And I see Presto also has calls on this. I'm guessing they're long calls. You didn't sell calls on this, but I'm curious as to why you're seeing any. If you have a long-term bullish outlook for Lyft, give me your use case or give me your reasons as to why. If you're short-term bullish, I think that we can have a different conversation. If you're just trading it based off of maybe it's so bad it's good, and maybe it has a decent day here after earnings, I could get down with that. But long-term, I just don't see. I would be very surprised if we see any kind of crazy moves in Lyft. One last thing that I wanted to address as far as earnings are concerned, we have TripAdvisor as well. That's ticker symbol TRIP. Now, we already heard from a lot of the travel industry, right? We heard from Booking, Expedia, and Airbnb. But hey, listen, there could always be something to learn from these earnings no matter what. Stock's actually up right now, but it's down 31% over the last 52 weeks. It's down only 16% over the last or since year to date. So it's actually outperforming. Forward PE on this is also very expensive at 28 times next year's earnings. Estimated earnings per share 38 cents, 5 upward revisions to 10 downward, $443 million in revenue expected. The company is still growing like crazy. And so that's why I was mentioning to you guys, the growth is what's worth paying a premium for, at least in my opinion. It's a profitable company that continues to grow hand over fist. The consensus here for 38 cents would represent 137% year-over-year growth in profit. Revenue estimates at 443 million would represent a 50%, nearly 50% year-over-year growth. 46.3. So I rounded up to 50. So shoot me. They've beaten estimates 38% of the time over the last 2 years, and they've beaten revenue estimates 88% of the time. So as I mentioned, it's expensive, but I think that, in my opinion, TripAdvisor should do well. I think they should do well. And even though they're a little bit expensive from a PE standpoint, the growth justifies it, in my opinion. That growth is insane. In a time where everybody's screaming recession, right? That growth is just insane to me. Okay. Some of the arguments I'm seeing that Presto says part of that increased revenue per rider can be attributed to increased airport rides as travel comes back post-COVID. In fact, Lyft has said its airport use case reached an all-time historic high. Hey, that's a fair point. That's a fair point. I'm not dismissing that. I think that's more of a short-term thing, though. So, but follow this up with airlines did well, Lyft should do well. I think that's just kind of goes along with the short-term move on Lyft. As we come into the close, we're about just a second away from the close. Let's check in on Lyft here. Here's your 5-minute chart on Lyft, and we are officially closed for the day. As of this market close here, the S&P still closed up 36 points. The Dow closed up 425. NASDAQ closed up 89 points. Crude oil, as I'd mentioned, ended the day down just slightly. Bitcoin still sitting at 387, down on the day down as well. That's good for about 2% in the red for Bitcoin, but still looking great. Bitcoin's at $20,800 per Bitcoin. That's actually looking pretty strong. I think there's a potential bottom that we have seen on that. But let's take a look at some of the moves that we're seeing so far. Lyft doesn't have too much movement to it just yet, but those earnings are coming. So I see some folks are tuning in so far. If you guys want to hit that like button, I certainly would appreciate it. And it looks like EOS Enterprises also has earnings today. I saw Appreciate you shouting that out, Gerardo. We'll take a look at that. We'll take a look at that for sure. I got that pulled up. I'll give you the expectations here. A loss of 91 cents, $11.49 million in revenue. Very tiny company. Only one analyst actually covers this. But if we see any movements on it, I'll certainly be on the lookout. Stock's down 78% year to date. Pretty rough stuff. Okay, no strong movement here on Lyft just yet, but it's coming. We'll continue to keep an eye on this. Let's see what else might be moving here. No movement on Clover either, even though it saw a decent move here right into the close. Take-Two, ticker symbol TTDW0. WO. Good Lord, I can't talk today. Very tired today, guys. Very tired today. Yeah, let me check back in with the poll. So, as at the beginning of the show, I put in, do you still hold Clover stock? Actually, quite a bit of you have responded so far. So 59 of you responded. 27% say, yeah, but why bother selling now? Which you can make an argument for. It's down this far. What's the practically sitting at zero? Cut it a long time ago was 23% of you. Nobody's 47% said nope. And somebody said, baby, come back. Yeah, Five9 also reports today too, which I have that pulled up as well. I'll be covering Five9 too. Let me see if there's any movement on this one. As I pull up the expectations for Five9. If you guys remember, Five9 was a potential acquisition candidate from Zoom, and that fell through, unfortunately. Estimated earnings for Five9 was 35 cents, $195.69 million, all upward revisions for Five9. That would be crazy if we saw a wild move on this. So far, the stock hasn't really moved much here in after hours, but it's trading at 34 times we'll call it 35 times next year's earnings. That's pretty expensive. But again, some pretty decent growth here. I think it's expensive even with this growth. This growth isn't like the 50% we saw from the other ones earlier on. But it's worth at least taking a look at. The estimate of 35 cents per share is a 25% year-over-year increase. Revenue would be 26, almost 27% year-over-year increase. So over the last 2 years, they've beaten earnings estimates and revenue estimates 100% of the time. So obviously, it's going to come down to a guidance numbers for Five9, and we'll talk about that once those numbers come out. Can you ask Take-Two about GTA when they start? Can I ask about Take-Two about? I don't cover the earnings call. I'll just cover the earnings report. But we can find out if they actually talk about GTA 6 for sure. So about 164 of you guys watching. I certainly appreciate it if you hit that thumbs up. Thanks so much for hanging out. Also, if you're watching on Twitter, appreciate you. I actually just started simulcasting on Twitter. So if you guys are watching there, I certainly appreciate it. I see a few of you out there watching. Thanks so much for the support. You guys are amazing. I appreciate you. I appreciate you, iApple. All right, Take-Two. Dragos bought says where did he? Dragos bought says I bought Take-Two. Pump it. Okay, Take-Two to the moon. There you go. You're welcome. Take-Two hasn't moved at all. Oh, here we go. Take-Two's earnings numbers are out. The stock's down 5.5%. Sorry about your luck, bro. Take-Two is getting slash right now. It's down 5% after hours. Let's see if those numbers are out. My assumption is that they are on that type of movement. Let's see. I mean, immediately down here after hours. Let's see what they got. As I'd mentioned, Take-Two was expecting $1.54 billion in revenue. That would represent a 56.4% year-over-year growth, which by and large, by the way, is insane. That's insane growth for a company that's been around this long. Over the last 2 years, Take-Two has beaten earnings estimates 38% of the time and has beaten revenue estimates 100% of the time. So we'll see what they have to say about the earnings estimates, but that growth is still wild. as I continue to try to find these numbers to pull up for you guys. Let me see if I can give her a little refresh. Little old refresh. Here we go. So, a couple numbers that are in already. Net revenue increased 62% to 1.44 billion. As I had mentioned before, 1.54 was the expectation. So they actually came in well below expectations for revenue. Now, Take-Two says even with the $1.4 billion, that's a net revenue increase to 62%. Okay, interesting. GAAP net loss per share was $1.54. If you guys recall, I had mentioned that the revenue or the earnings per share estimates were at oh my goodness, where is it at? Come on. This was $1.38. So it looks like they beat on earnings per share, but missed on revenue. And that's probably why the stock's down. It plummeted down around 10%. It's now down around 7%. So it's clawing its way back a little bit. But I think I have to believe that the revenue miss here is what's getting everybody kind of panicking. That's what's bringing on the panic sell at the moment. Let's see here. So it's starting to climb up a little bit more. I'll cover a couple of the other pertinent numbers here. Adjusted unrestricted operating cash flow for the 6 months ended in September 30th, 2022 was 17.1 million. Net bookings grew 53% to 1.5 billion. GAAP net, oh, sorry. So GAAP net loss per share. Oh, is that what? Oh, I read it wrong. So they didn't beat earnings. They missed it horribly. GAAP net loss per share. See, that four-letter word. They missed on earnings, guys. Take-Two missed on earnings. Looks like a loss per share of $1.54 on Take-Two. Let's take a look at Lyft. That stock is also tanking. Oh, surprise, surprise. Stocks, I mean, what did I say? Lyft is down 9.5%. It looks as if those earnings are probably out. Thanks, Captain Obvious. Revenue came in at 1.05 billion versus the 1.05 that was expected. They came in at 10 cents per share versus the 7 cents expected. So for the quarter, they actually came in above estimates. But revenue looks like it maybe slightly missed or came in line. Not sure that constitutes a 10% sell-off, but I would imagine the revenue or the guidance has a lot to do with this. Here it is. Q4 revenue guided $1.16 to $1.7. 1.16 to $1.17 billion versus 1.16 expected. So that's actually on the upper end of that guidance as well. Let me take a step back. Apparently, I was a little bit premature on my reaction to Lyft. And I have to say, I'm not seeing any numbers so far that would constitute a 9% sell-off. I mean, they beat earnings per share. They came in line on revenue. I can't call that a miss. And they actually came on the upper end of their guidance numbers as well for revenue. I'm not quite sure what I'm missing here as to why the stock sold off so much, but so far from what I'm seeing, this could potentially be an opportunity. They see Q4 adjusted EBITDA 80 million to 100 million. The estimate was 91, so falling in line there. Q3 adjusted EBITDA 66.2 million versus the 63, so that's also a good number. Sees Q4 revenue 1.145 billion to 1.165 billion. That is on the upper end of the 1.16 that was expected. Net adjusted net at 36.7 million versus 20.1. Then again, like I'm just reading through this, nothing actually tells me that I should be selling this off 10% today. Jin says, do you even lift, bro? Lyft ain't lifting shit. Yeah. Revenue misses by $1 million stock tanks. Yeah, I know that's what I'm saying, Presto. This doesn't make any sense to me. I don't know why there's that much. Rob P says rider numbers were down. I didn't catch that number. Actually. So that could be why. I don't know if it, again, is a reason to sell it off 10%. So it could be an overreaction, at least in the short term. But again, I digress. The stock just, they have trouble making money. We now, so a couple of quotes from the CEO. We posted another consecutive quarter of solid results with net bookings of $1.5 billion, underscoring our ability to launch exciting new games and content. Oh shit. I'm reading the wrong one. Guys, I am so out of it today. What is wrong with me? I can't be on the right stock this morning or this afternoon. I don't even know what time of day it is, apparently. Lesson learned, guys. Get sleep. Do yourself a favor and go to bed when you're supposed to. All right. Let's see here. So yeah, revenue missed. Oh, sorry, revenue missed by 10 million, but still, like, la di da. That's not enough reason, at least in my opinion, to sell it off that much. Karem says active riders as of 3 months ended September 30th were 20,312, up 7.2% from 18.9. That's good, Karem. But what was the expectation? Okay. Am I an SDC? A long ass time ago, I was an SDC. All right, let's take a look at some other ones. Five9 also was reporting today, this afternoon. That stock's down around 4.25%. Let's see here. FIVN. Let's see. They see earnings per share 40 to 42% versus the 51 expected for Q4. So that's the guidance number. And they see fiscal year earnings per share $1.35 to $1.37 versus $1.42. So that was a miss on earnings per share estimates for the full year. Sales 774 to 775 versus the 782 that was expected. So it looks as if Five9 missed on guidance pretty bad. They beat earnings per share 39 cents for the current quarter, and they beat that by 4 cents. Revenue came in and actually beat by around 200 million as well. They came in at 2.61 million. I think it's supposed to be billion. So they actually beat on earnings per share and revenue for the current quarter, but guided below estimates for the current quarter. They beat on the last quarter. So that's why Five9 is down around 5% here after hours. Activision, let's see if there's any movement on that. ATVI is actually slightly up. Maybe those numbers are I don't think it's out. I don't think those numbers are out just yet. We'll see. Oh yeah, they are. Net bookings at least 20% year over year growth. Still sees Microsoft deal closing by the end of June 2023. So we got a long ways to go for that. I feel like that keeps getting pushed back. I thought it was way earlier than that. Q3 revenue is at $1.78 billion. Earnings per share 68 cents. The expectations for that were 50 cents. $1.71 billion was also the earnings expectations for that. So they crushed earnings. Activision absolutely nailed it. They actually did really well. That's not bad at all. It's not too shabby. Pretty good. Guys, if you're watching right now, if you're visiting for the first time, hit that subscribe button. I certainly would appreciate it. And hit that notification bell as I go live every day, Monday through Thursday, to cover all of the earnings that are happening. And we haven't talked about Clover yet. We did talk about their expectations, but I don't see much on them just yet. Looks like there's some movement, but I don't think it's enough to really. I'll just double check. I don't think it's enough to determine. Looks like they might be out. Stock's down 2%. Year over year, apparently year over year revenue was great. Insurance MCR dropping from 102.5% to 86.3%, which is good. Non-insurance MCR going from 102 to 104, which is not great. Lives under management doubling year over year, which is good. Growth here is extraordinary. Nobody argues that. The big problem here for Clover is, of course, are they making any money? But the growth story is certainly there. The stock's trying to flirt with going green here. We'll see if it does. They came in revenue $856.8 million. That's 100% year over year growth for revenue. They beat that estimate by $57 million, which is good for a company of this size. They recorded a net loss of 75.3 million, which I think also beats estimates. Third quarter insurance, as I mentioned, MCR 86.3%, year-to-date insurance MCR 91.7. The company updates 2022 full year guidance to include improved insurance MCR range of 93 to 94%. That is actually pretty damn good, guys. Listen, I know that Clover is Clover and the stock is trading at $1.36 after it was at what, $28 a year and a half ago. But listen, the growth here can't be ignored. I'm not going to sit here and tell you guys got to go buy it, but I'm also not going to sit here and tell you that it was an absolute shit quarter. I can't tell you that it was. The growth there is extraordinary. 100% year over year growth, and the stock's down. I don't know. You be the judge. Why should it be down? Oop, let's see here. Five9, checking back in on that one. That stock's now down another 11.25% on not an earnings miss, but earnings guidance miss. Let's take a look at TripAdvisor. That stock is down 15%. Holy hell. Probably the worst loser of the day today. They were expected to come in at 38 cents per share, $443.24 million in revenue. Let's see what the actual numbers are for TripAdvisor. You know, that's actually pretty shocking. They missed 28 cents is what they came in at. As I'd mentioned earlier, the expectation for TripAdvisor was 38 cents. So they missed by 10 cents per share. They did beat revenue, though, $459 million. They beat that by $15.676 million. So a decent beat on revenue, but they missed on earnings per share badly. Q3 consolidated adjusted EBITDA was 150 million, or 25% of revenue. Gross bookings was approximately 800 million, or approximately 192% of that of the 2019 levels. That is insane growth. Year over year, GBV grew approximately 113% from approximately $380 million in Q3 2021. So that's year over year, 113% year over year growth, 192% growth from 2019. The outlook here for Q4. Here's the quote. We expect a moderate step down of TripAdvisor core revenue as a percent of 2019 from Q3. This step down is not related to a change in our revenue trends, but particularly a strong August Q3 2022 and unique items in Q4 2019 that create a tougher revenue comparison. We point out that in 2019, television advertising for brand TripAdvisor and other expenses were considerably higher than in Q3 than Q4, creating a sequentially hard comparison from an adjusted EBITDA margin perspective, in addition to the impact of revenue step down. End quote. That is a stupid. Why would you do that? That is just way too complicated of an explanation for guidance. Why do you need to point that out? They actually had a great quarter, an unbelievable growth. And then you come in and kind of like poo-poo on your own guidance and poo-poo on your own numbers. God, somebody fire that CEO. You think Apple's going to come in here and be like, well, you know, if you compare it to last year, there were so many outlying things that happened last year. No, they just say, hey, we beat last year. We're up 100% year over year, and let it be done. What the hell? And the stock tanks 15%. They better clean this up on their conference call. That's all I got to say. I don't have any skin in the game, by the way, on TripAdvisor, but that is a stupid ass quote. Stupid. Tim's had earnings today. Oh, look, they did have earnings today. Listen, everybody be out there. All the men be out there buying Viagra. Hims and Hers Health Inc. The stock is up 17%. Let's see if I can find those numbers for you. I didn't even see that on my schedule that Hims was reporting, but we can cover this. Earnings was expected to be a loss of 6 cents. $130.33 million in revenue was expected there. The stock was already up 8.7% and now up another 17% here after hours. Let's see what those numbers are. The actual numbers for Hims. Let's see here. Revenue came in at 144.8 million. What did I say the expectation was for Hims? Let's see. Oh my goodness. Is that right? 133.33 million was expected. 144 was the actual. I believe that's also 100% year over year growth, if I'm not mistaken. Because I think that 133 was 75% growth. So 133, yeah, it's 130.33 million. They came in at 144 million dollars. A loss of 6 cents was expected. So nearly 100% growth, 95%. They came in at a loss of 1 cent, where there was a loss of what 9 cents is what I said, or 8 cents is what I was expecting. So they crushed that quarter. Stocks up 16 and a quarter percent. Looks like this is actually the winner of the day. I mean, my goodness, insane growth. 97% or 95% growth year over year for HIMS. Absolutely smash it. You said it, Danny. You said it, bro. Absolutely crushed it. Heinz says maybe they're downplaying. Going back to the TripAdvisor quote, why? In this market, I don't think you have to downplay shit. I don't think you have to downplay shit. A lot of people are asking about DWAC. Let me just take a look at this. DWAC is now down 5-6%. Went up 66% today. Listen, there's nothing about this that I actually like. You guys want to put your money into it by all means, but I have nothing to give you. Stock, a company with no revenue, no nothing. There's a lot of there's a vision here, and maybe there's something to that, but it's super risky. It's super risky, and this isn't me hating on Trump. This isn't me hating on anything or the platform. I would say this if it was any company that had these numbers and then just decided to go public. It's just super risky, very speculative. I'm sure I'll still probably get hate for that, but listen, I gotta say what I gotta say. I hope they do well. I hope for those of you who are in it, I hope it goes to the moon. I mean, a 66% day is very unusual. So buying all the way up here is very risky. So just be careful. If you bought it down here at $15 a share, congrats. You made a shit ton of money. I wouldn't hang on to it though. I just would be super risky for me personally. Okay, so let's check back in with some of the other ones. Was there any of them that hadn't reported yet that I haven't covered? I don't think so, but please feel free to shout it out if I haven't covered the stock that you were watching today. But I'll do a quick recap. So if you guys are just joining, first of all, hit that subscribe button. I certainly would appreciate it. I go live Monday through Thursday to react to these earnings. This Lyft is down at now 12.25% on not so good the guidance numbers. They actually ended up doing well on the quarter they were reporting on. So they beat on earnings per share. They actually came in line on revenue. The real reason that this is actually moving down is riders, slowing in riders. So I don't know. I did shit on Lyft, and this doesn't surprise me to see this down so much. But after seeing those numbers in the quarter they had, I don't know if it constitutes a 13% move down. That's just me. You guys let me know. You guys let me know. Not quite sure about that. I think this is a strong overreaction for Lyft. Going in and looking at Five9, that stock's down on a pretty horrible guidance miss. They actually came in and did pretty well for the current quarter that they're reporting on. For the quarter that we're actually in right now, they're giving not so great guidance on. And now that stock has continued to plummet. It was down 5.5% going into the close. Now down an additional 13% here after hours. Now we can go into some other stuff. TripAdvisor also not a great quarter. That stock's down. Oh, I'm sorry. It was a great quarter. I take that back. Insane growth. The guidance or the explanation for the insane growth is why the stock is down. Unbelievable. Unbelievable. Like, don't over explain why you saw 100% year growth. I know that you're trying to be transparent, but like, my God, it's like saying that you have a wife who's a 10 and you're like, she's all right. Remember that movie, The Other Guys? Shit, what was her name? Somebody help me out. The Other Guys, that other bit with Will Ferrell. Oh my God. Was it Shayla? That was so funny. The whole bit was hilarious. It wasn't Shallow Hal. It wasn't Shallow Hal. My wife at 10, but she crazy. Oh God. There's so many hilarious bits in that movie. That's pop. Yeah, it's Ava Mendes, but what was her name in the movie? I don't remember. Gator don't take no shit. Clover actually decided to turn itself around. It is up now 3% on some really great news, some really great numbers as far as growth is concerned. Still, obviously, operating for a loss, but but doing extremely well. The growth there is absolutely tremendous. Absolutely tremendous. What's going on with Take Two? Asks Elad. We can take another look at that, but we already did cover Take Two. Take Two came in and now is shitting the bed here, 12% down after hours. I can tell you that Take Two didn't have the best numbers. They cut bookings views below expectations. So they came in a loss of $1.54. They're expected to be profitable this quarter. So that's pretty terrible. A loss of $1.54. They missed by 72 cents. I'm pretty sure they were supposed to be profitable this quarter, but this says they missed by 72 cents. Revenue of 1.4 billion. They also missed on that. But the growth here is still insane. 63% year-over-year growth. During fiscal second quarter 2023, total net bookings grew 53% to $1.5 billion as compared to $984.9 million during the last year's fiscal second quarter. Net bookings from recurrent customer spending grew 76% and accounted for 80% of total net bookings. Digitally delivered net bookings were up 62% to $1.4 billion as compared to $876.1 in last year's fiscal second quarter and accounted for 94% of total net bookings. Expect to deliver net bookings of 5.4 to 5.5 billion in fiscal year 2023. So these aren't great numbers from Take Two. As a result, the stock's down nearly 13%. That's what happened there. Is it a buy ahead of GTA coming probably in 2023, 2024, says Elad. I don't think so, because I think that there's so many people already expecting it. Right? Like, I just think that there's already such hype and such high expectations that I don't think that there's much really to I don't think buying it because of GTA is a good idea. If you want to buy it because you're looking at that 63% year-over-year growth and you're like, you know what? They're growing like crazy. This 15% move down is an overreaction. I can get down with that argument. Can I get down with the fact that, oh, well, they're coming out with Grand Theft Auto? Okay, a lot, whoop-de-doo. No, I don't think that actually moves the stock. If it does, maybe it's a day, and who knows where it'll actually go. I don't think it's actually going to move a ton at all, in my opinion. Usually you don't see moves in stocks for stuff like that. You just don't. Daniel G, what do you think about Disney's earnings tomorrow? Yeah, so Disney's earnings are tomorrow. There's a couple other ones that are reporting as well. Disney is coming in. I'm sorry. Let me pull up all the other earnings that are actually reporting tomorrow, so I can get that for you guys. They're expected to come in. Let's see. Tomorrow after hours, we have Disney, Oxy, AMC, Upstart, which Upstart has been insane all over the place. Lucid, Affirm, a couple others that are going to be reporting pre-market as well. Norwegian Workhorse. God, remember Workhorse? Planet Fitness, which has been an absolute monster. SunPower, DuPont, a couple other ones also reporting tomorrow pre-market. We might be able to react to some of those if there's anything worth noting there. But to answer your question, as far as Disney's concerned, they're expected to come in for earnings at 56 cents per share, $21.44 billion. Lots of downward revisions for Disney. Let's take a look at the chart here. The chart sitting at the stock sitting at $100 a share. We'll come back out to the weekly chart. So this is your weekly. Obviously, you can see the pandemic low. Disney's living almost nearly near where the pandemic lows are. And if there is a fear of recession, perhaps we do see a slowing of growth for Disney. But I will tell you The move down here for Disney, I think, is that it's already baked in. And it wouldn't surprise me. Disney comes in and actually crushes those earnings. And the only reason I say that, and then actually gives relatively decent guidance. And the only reason I say that is because I look at the revisions here from analysts, and it is all bad. One upward revision, 20 downward revisions for Disney. Last time they came around, beat earnings per share. They also beat revenue. They came in and had wonderful numbers for their Disney Plus platform. And to be honest with you, it's been a little bit of a wash when it comes to the growth numbers for viewers. I looked at Netflix's numbers and they were absolutely phenomenal. I looked at Paramount's and they were just kind of okay. And we saw how Paramount did. I I hate that Disney moves on Disney Plus subscribers because that's not what Disney is. That's just part of what Disney does. That isn't even what really makes Disney money right now. The parks do. And we're starting to, and we already saw from the travel numbers, right? From TripAdvisor, from all the way from Airbnb, Booking, Expedia, and the airlines today, right? Disney moved less than 1% today off of that, off of the airline news. If travel's maintaining and staying as it is, I would think that the parks are still going to do well too. Again, this isn't me telling you that you have to go out and buy Disney, but if you combine Disney Plus, Hulu, ESPN Plus, and their streaming platforms, they are already bigger in 2 years than Netflix, and they're still growing. So I think, in my opinion, that it's been rough for Disney. But if you have a good time horizon on this, if you have a longer one, a year or two out, maybe even 5, you're going to look at this $100 number and just laugh all the way to the bank. In my opinion, this has been cut in half since March of 21. So in 18 months, this has been cut in half. I just think that it doesn't deserve to be all the way down here. Now, you can make the argument, hey, well, it is expensive after all. I mean, it's sitting here at 26 times next year's earnings with growth that doesn't really support that. Fair. That's fair. I don't really have much to say about that part. Is it a little bit on the expensive side from a PE standpoint? Yeah, but it's Disney. I just don't see them going away, and I think that the growth here is still the opportunity for growth is still actually extraordinary. So that's my spiel on Disney. Full disclosure, I do own it, but I don't own a ton of it. I mean, it's just kind of in my long-term portfolio, very diversified. So it's just a small piece of my pie. But I mean, listen, yeah, Disney makes close to $6 billion a year on Disney Plus, says Chris J. Listen, I mean, it's just revenue. I don't know what their profit is on Disney Plus just yet, if they even are, excuse me, profitable. But man, I don't know. I just it may end up going in this year or tomorrow after earnings. We'll see. But I still think that Disney's worth hanging on to. So that's going to do it for today's earnings reaction, guys. Thank you so much for tuning in. I certainly appreciate it. It has been an amazing afternoon. Just a nice little warm up from Monday before we get into some of the other heavy hitters. As I mentioned, what to expect for tomorrow. We got Disney, Occidental Petroleum, AMC, Upstart, Plug, Lucid, Novavax, Affirm. Those are all going to be reporting after hours, and I, of course, will be reacting to those. So make sure you're hitting that subscribe button, hit that thumbs up on your way out the door, and make sure that you're hit that notification bell to get notified when I go live tomorrow at 3:45 p.m. Eastern time. Until then, thank you so much for tuning in. I'll see you all tomorrow.